Want to make sure you don't owe the government any money at tax time? There are very specific things you can do to increase your chances of getting a tax refund. I explain it all in this video, so stick around if you want to find out what they are. Hi. My name is Kat and I'm a chartered professional accountant. On this channel, we discuss Canadian tax, accounting, and personal finance, with the goal of helping you keep more of your hard-earned money in your own pockets. Today's video is all about how to make sure you get a tax refund when filing your return. We'll go over how to get a tax refund if you're an employee, ways to get a refund if you're self-employed, and how to get a refund if you own a rental property. At the end of the video, I'm going to share a tool to help you determine whether or not you can expect a refund this tax season. So let's jump right in. Before we dive into specific things you can do to get a tax refund, we need to start by understanding how tax refunds actually work. Many people mistakenly believe that a tax refund is free money from the government. This is not the case. A tax refund is simply the government giving you your own money back because you overpaid income taxes throughout the year. If you have a regular job, for example, your employer withholds income taxes on every paycheck and sends this money to the government on your behalf. At the end of the year, by filing your tax return, you calculate how much taxes you actually owe. If your employer withheld more than what you owe, you'll get a tax refund. For example, if your tax return indicates that you owe $20,000 in taxes, and your employer withheld a total of $25,000 throughout the year on all your paychecks, you would get a $5,000 tax refund. If you'd like a more in-depth explanation on tax refunds, be sure to check out my video all about how income taxes work in Canada, linked in the description box below. Now let's look at what you can do to get a tax refund if you're an employee. As I just mentioned, employees get taxes withheld directly off their paychecks. The amount withheld is based on your salary, as well as on how you filled in Form TD1 when you first got hired. If you don't have any other sources of income, the amount withheld should be virtually equal to the amount of taxes you actually owe. This means that you shouldn't have a big refund or amount due when filing your tax return. It also means that you can almost guarantee yourself a tax refund if you take advantage of the strategies we're about to discuss. First, you've probably heard this one before, RRSP contributions, but let me explain why it's important and how it works. RRSP contributions reduce your total income for the year, which means you're taxed on a smaller amount. Since your employer calculated how much taxes to withhold based on your salary, making an RRSP contribution usually results in a tax refund because the amount you're actually taxed on ends up being lower than your salary. We'll look at an example of how this works in a second. RRSP contributions are particularly important if you have other sources of income, such as interest and dividends on your investments. Your employer won't have taken this extra income into account when withholding taxes, so you risk ending up with an amount due to the CRA if you don't contribute to your RRSP. Okay, now for our example. This is Tristan. He has a full-time job which earned him $70,000 in 2024. Based on this salary, his employer withheld $9,000 from his paychecks throughout the year. Tristan has RRSP deduction room available, so he decides to make a $5,000 contribution and claim the full amount on his tax return. This lowers his income to $65,000, and his taxes to just under $8,000. Tristan will therefore be getting a tax refund of over $1,000, because the amount he owes is lower than what his employer withheld. For more information on how RRSPs work, I've linked my video all about them in the description box below. Another thing you can do to get a tax refund as an employee is to maximize your tax credits. Tax credits are amounts which directly reduce the income taxes you owe. And the less you owe, the more likely you are to get a refund at the end of the year. Most credits are based on your situation. For example, as an employee, you get the Canada employment amount, as well as credits for your EI and CPP contributions. However, there are a few credits which require you to actually do something specific in order to get them. The most common ones are medical expenses and donations. Most medical expenses you incur can be claimed on your tax return, including ambulance and hospital services, dentist fees, service animals, and vision devices. A full list is available on the CRA's website. so be sure to keep all of your receipts for medical expenses. If you have prescription medication, you can ask your pharmacy to print a detailed report of all your purchases for the year, instead of keeping individual receipts. Another option to reduce your taxes is making donations to registered charities. Your first $200 of donations will get you a federal tax credit of 15%. Anything above $200 will get you a tax credit between 29 and 33%. You also get a provincial tax credit for the same donation, which means you're getting anywhere between 19 and over 50% of your donation back into your own pockets, depending on which province you live in. Other tax credits which you might want to consider include political contributions, tuition fees, and home accessibility. Once again, a full list is available on the CRA's website. Before we go on, if you've learned something so far, please take a second to give this video a like, it really helps the channel. Alright, the final two things you can do to get a tax refund as an employee only apply if you're a first-time home buyer. They are FHSA contributions and the home buyer's amount. FHSA contributions work just like RRSP contributions. They reduce your total income for the year and therefore, they lower the amount of taxes you owe. For an in-depth explanation of the FHSA, have a look at my video linked in the description box below. The home buyer's amount is a tax credit. You can claim up to $10,000 for the purchase of your first home. You can also split this amount with your spouse, if they are eligible. The tax credit has a rate of 15%, so this will reduce your income taxes by up to $1,500. Next, let's go over how to get a tax refund if you're self-employed. First of all, let me know in the comments down below if you earn self-employment income and what your business is. Second, everything employees can do to get a tax refund also applies if you're self-employed, so be sure not to miss out on any of the items I already mentioned. That said, as a self-employed individual in Canada, you also have additional ways to reduce your income taxes and hopefully get a refund. One way is by making sure to claim all of the business expenses you're entitled to. These expenses directly reduce your income and therefore, the amount you're taxed on. What's more, if your expenses exceed your income, you'll end up with a business loss. This loss can be used to offset your other income such as employment income if you also have a job, or investment income and capital gains. The full list of expenses you can claim is available on the CRA's website and on Form T2125. They include everything from inventory to administration fees, to home office and motor vehicle expenses. Capital Cost Allowance, or CCA, is particularly interesting because you can choose the amount you want to deduct. For more information on this, as well as 10 tax write-offs for small businesses that you don't want to miss out on, check out the video linked in the description box below. Second, unlike employees, self-employed individuals don't have any income taxes withheld at source. This means you're likely to have a large amount due when you file your tax return. To avoid this, and potentially even get a tax refund, you can make installment payments throughout the year, even if they're not required by the CRA. In other words, you voluntarily make payments to the CRA several times per year, to make sure you don't end up owing a huge amount of money come tax time. There are charts available on the CRA's website to help you calculate how much your installment payments should be, based on your income. Moreover, the CRA will require you to make installments if your net tax owing was more than $3,000 last year, and in one of the previous 2 years. If this is the case, you will receive installment reminders with the dates and amounts due. Alright, next, do you own any rental property? Let me know down in the comments. If you do, there are specific expenses you can claim which will help further reduce your income and therefore your taxes. The more expenses you claim, the higher the likelihood of getting a tax refund. As with self-employment, if your rental expenses are greater than your income, you'll end up with a rental loss which can be used to offset your other sources of income. The full list of expenses you can claim is available on the CRA's website and on Form T776. They include things like property taxes, insurance, interest, as well as repairs and maintenance. Once again, Capital Cost Allowance, or CCA, is particularly interesting because you can choose the amount you want to deduct. Just be mindful of CCA recapture, which could apply if you ever sell the property. Okay, now that we've gone over different ways to get a tax refund, let's talk about a free tool you can use to check if you're going to be getting a refund or not at tax time. As you can see, the tool is an Excel file in which you enter your income from your job, as well as from your business or rental property. You also enter any RRSP contributions you already made or are planning to make, as well as the amount of income taxes withheld on your paychecks or paid by installments directly to the CRA. The tool will then tell you whether you can expect a refund or not when you file your taxes. You could actually use the RRSP contribution box to test out different amounts and see how much it would take to end up with a tax refund. If you'd like to use this tool, simply click on the link in the description box below to download a copy of the file. So there you have it. We discussed how to get a tax refund if you're an employee, ways to get a refund if you're self-employed, and how to get a refund if you own a rental property. I also shared a free tool designed to help you determine whether or not you can expect a refund this tax season. That's all for today's video. I hope you found the information helpful. Don't hesitate to ask your questions or submit special requests for future videos in the comments. Be sure to hit that notification bell if you want to be the first to know when a new video is released. Thanks for tuning in, and I'll see you next time.